my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. As is usual, at this time of year, I will stop looking at my daily charts and instead concentrate on the longer term view, using my monthly, even yearly charts to commentate on a market. If you would like to discuss any of these, I'll only too happy to hear from you. So let me now introduce today's longer term chart. Today I'll be looking longer term at cable, aka sterling against the US dollar. Now, I've repeated the following in my annual reviews of cable now for many years, and I quote, "I've written for many years how the long-term bearish shift pitchfork from 2007 to 2014 has been running this pair," end of quote. To help, I have again highlighted this pitchfork on my monthly chart in dark blue. However, at the end of 2020, this uninterrupted run lower seemed to end. In December 2020, the market broke up through the upper time, currently at 115.71, of this long-term bearish shift pitchfork. Yet the rise petered out just short of the 2018 horn top at 143.77, making a double top in 2021 and heading again once again lower. In the process of moving down, prices formed a large 2016 to date cat's ears pattern, a pattern that is effectively a large double top in a trending lower market. The move lower hasn't been a straight run, more like two steps down followed by one step up. It was, as I said back in January 2021, and I quote, "On a larger scale, much like Eurodollar, we have the possibility here for the action from 2016 to date to be a cat's ears pattern. It's in an earlier phase of construction than the one in Eurodollar," end of quote. In April 2022, the market pushed down through the broken upper time, though it took another 2 months to finally close below it. Since then, we've had the subsequent move lower that looked like it might make this cat's ears pattern happen, but 2, maybe 3 significant obstacles appear on the downside. They cropped up. Firstly, target X for the cat's ears pattern is a long way below, in the 86.10 zone. This may take more than many a lifetime to reach, but it is still there. Secondly, the all-time low at 105.22 from May 1985 is below. This was breached back in September of 2022, but the reversion was enough to send prices back up to test and break above once more the upper time. After some hesitation at the start of 2023, prices moved higher to test the outcome of an imperfect bow tie formation, made up from the 2-year moving average, currently at 123.62, the 5-year moving average, currently 128.42, and the 3-year moving average, currently 128.15. The imperfection was not that the moving averages did not move lower, though the 3-year did hesitate for a bit. Rather, it was that they were not in the right order. In June and July last year, prices finally started to test the moving averages, as well as the 50% Fibonacci lines for the 2018 to 2022 move at 123.80, and the larger 2016 to 2022 move at 127 even. So far, these moves high have been capped by these resistances, plus a new feature. The upper time, currently at 126.59, of the 2018 to 2021 bearish Andrews pitchfork, which I've highlighted in bright red on my daily chart now. This new pitchfork has seemingly drawn an effective parallel, if higher up, to the original upper time of the 2007-2014 bearish shift pitchfork. This all ties in with a pattern I noticed last year, a V bottom formed throughout 2022. I said on this V bottom back then, and I quote, "If prices hold at the broken upper time, then there very much is the opportunity for a further move lower, assuming of course that the market does not form an extension or shelf that in turn becomes either a bull flag or pennant." Well, and at the end of the quote, well, the market did not hold at the old 2007-2014 dark blue upper time in 2023, and instead rose up to the newer bright red upper time of the 2018 to 2021 bearish Andrews pitchfork, plus all those previously mentioned moving averages and 50% Fibonacci lines. Thus, we are seeing an extension or shelf being formed here early on over the latter part of 2023, but it's not clear yet. It's not clear yet if this will lead to a bull flag or a pennant. If it does, then there is potential up to the 146 area. We still have this earlier bearish pattern, or of a cat's ears pattern over 2016 to 2022 to deal with. This leads me to my final 2 points. Firstly, between September to October last year, the market formed a 3-month bullish morning star pattern, with any break higher directly challenging the combined upper time stroke 50% Fibonacci line stroke moving averages over head resistances. Secondly, and this counts as the previous bullish pattern, is the bearish bow tie, formed from declining 2, 3 and 5 year moving averages, respectively currently at 129.62, 128.15 and 128.42. In theory, the initial move of the market should be in the direction of the breakout of the bow tie, which it has done. The second part is that between 15 to 20 sessions after crossover, we should see a move in the direction of the moving averages. In other words, between April to September this year. I'll be interested to see which of the pressures will win here. The capping bearish pressure with the bow tie formation, or the V bottom with the extension. Thank you for watching and listening. This annual broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.